Hello, traders. It is Tuesday, March 30th, and we're about 3 hours into trading. Thank you so much for posting your questions in the comments section of my YouTube video. I am going to be answering as many as I can right within that section, and I'm also going to be doing videos on topics that I think I can do an entire video on. The most popular question was, please talk about day trading the S&P 500. I really can't do it justice off the cuff, so I'm going to need to put a presentation together, and it'll probably be a multi-part series, but I will do that video. And I'm not just going to talk about the 1OP indicator. It is all that I use to day trade the S&P 500. However, I want to talk about all of the other things that go into trading as well, so that if you're not using the 1OP indicator, you still are able to identify all the important things that you need to be taking a look at. So if I can knock off a couple of other questions within the room, yesterday someone asked me, what about trading X as President Biden goes to Pennsylvania and talks about his infrastructure bill? And you can see here how X has been moving higher. It has been a stock that's been coming up on our searches a lot. And you can see here that you've got fairly deep trough, really nice support down here at the $16 price level. There's your 100-day moving average. And now we are breaking out through that horizontal resistance on pretty decent volume. If I look at the stock, it's very choppy. So obviously it's news driven. Back in here, when cyclical stocks were just starting to get a bid, you can see how the stock had this beautiful, nice, steady price action. This is what we would prefer. Once it makes that blow off rally, now all of a sudden you start getting into more volatility. Nice bullish flag formation there. Really nice breakout. We're all over the board right now. Do I trust this breakout? Not really. I think that this stock has shown you that it can move around quite a bit. So the approach to a trade like this would still be to sell an out of the money bullish put spread. I'd want to go down to that 50-day moving average right there. And you can see how that comes into play at about $19.30. So the short strike price for me personally would be to sell the $19 puts. Let's take a look at that earnings release date, 4/29. So we have to pick an options expiration before 4/29. So let's put up the option chain here, and we can see that we've got April 23rd is the closest we can get. And let's take a look at that $19 put, and you can see the stock is volatile. The bid-ask spreads are a mile wide. So if we click on the 19 put and we click on the 18 put, you can also see 3 cents bid offered at 32 cents. What would I be willing to accept for this spread? For me personally, if I've got $1 between the strike prices, I have to get a 20-cent credit. If I can get a 20-cent credit, that's going to represent a 25% return. How'd you get that number? Well, if there's $1 between the strike prices, I get to apply the 20-cent credit, so I only have to put up 80 cents for the spread. So 20 cents divided by the 80 cents that I have to put up for it equals 25%. So I would put a credit in here for 20 cents. If I get filled on it, I get filled on it. If I don't get filled on it, I'm not going to worry about it. So that's how I would approach this particular trade. You can see it moves around a lot. So if you do take a bullish put spread on this, you can expect that it might come back and test that 50-day moving average. So I would not anticipate that this is news that the market is not pricing in. Everyone's aware of what President Biden plans to do with his infrastructure bill. We don't know if it's going to get passed yet, but we are on the brink of a massive economic recovery now that the coronavirus is starting to settle down. And that also will play out on a global basis as well. So US Steel should perform well, and I like going all the way down here so that I can let the stock move around and I will be out of harm's way. That's how I would address that particular situation. Now, I did have another question that asked about long tails and what does that mean and why in the heck does that happen? Well, it is a sign of support and resistance. So in this instance, this is the S&P 500. So we'll use it as an example. You get this market decline right in here. This is not what I would consider a high quality market decline because you can see that the candles are not stacked one on top of the other. What does stacked mean? These two candles would be stacked. You can see close on the high, open right where that close was, and it closes on the high. Here are some stacked candles, long red candles stacked one on top of the other with very little overlap. That is a nice solid pattern right in there. That tells me that this is a strong move. These candles right here, you got a nice long red candle, and then you got a green candle in between. Another nice red candle, green candle in between. When I start to see this, it tells me that the momentum on the downside is fairly limited. I am not going to be expecting ka-chunk, ka-chunk, ka-chunk lower. There's a bid, and eventually you come down to this level here, and now all of a sudden you start forming support. Looks like we're going to go higher. No, they come back and test that low of the day. Now here you start getting some of those long tails under the body. So sellers come in and they try and whack the S&P. They're testing the bid. What's down there? Is there anybody down there? Oh yeah. The buyers come in and they rally it back up. Next bar, wham, they try and hit the bid just to see if anybody's there. Buyers come in and they rally it back up. Wham! One more time. Now you've got a series of tails under body. This tells you that the bid right here is very, very strong. And now that we have a support level that's starting to get established, sellers are realizing that, hey, there are buyers there. We're better off holding out for higher prices, and buyers are getting a little bit more aggressive too because they see this. Hey, I'm not the only one down here. There are other people trying to buy at this level too. Eventually, you get the release. So that's what those tails represent to me. And in this particular case, this is the S&P 500 today. Here you have long tail under body, rally up. There's another one, rally up. Those are signs of support. Now, this long red candle does test that support level one more time, but you can see it closes this time right on that support. They try and really nail it one more time to see what's down there, and this candle closes on its high. Now all of a sudden you get this long green candle, and it actually engulfs that prior long red candle. These two candles together are what I call key candles. This is a key candle that tells you that support is firm right here. So I'm not expecting the market to continue to drift lower today. I'm trying to address the questions that you put into my comments section. If I can answer them right on YouTube in that area, I'm going to do that. If I feel that it needs a lot more time to discuss it, like trading the S&P 500, I will dedicate a video to it. There were some questions on exercise and assignment. I'll do an entire video on it. Some really fantastic topics for me to cover. So please make sure that you post your questions in that section below this video. If I don't get to it today, this is what I'm going to go back and record future videos on to make sure that I'm able to address those questions. And by voting thumbs up on these videos, I know which ones you have the greatest interest in. So I'm going to take a look and see what we can find in terms of stocks. And we'll go in and take a look at some of the stocks in our heavy buying list right now. X, by the way, looks excellent for day trading today. It's got a nice head of steam. Let's get our market bearings. That's always the most important thing that we need to do. This is a sideways market. Now, I'm going to be talking about context when I do my S&P trading piece, but you can see lots of mixed candles in here, green and red. We've got long tails under body, then we get a long red one, instantly followed by a long green one. What does all this tell me? It tells me we're not going anywhere fast. We are within the prior day's range. There's the low from the prior day, there's the high from the prior day. We're right in the middle, and we have been able to stay within the range that was established in the first 90 minutes of trading. Going to be a pretty quiet day. We do have a holiday coming up. That also tends to reduce activity. So not a lot going on. I do still like what I see on a daily basis, D1 basis, downward sloping trend line, really nice big long green candle closing near its high. Half of this long green candle has been preserved. So I believe that we continue to move higher, challenge the all-time high as we get closer to earnings season. We've got some big economic releases coming up. Now, the unemployment report is going to be released Friday, but the market's not going to be open. That means that tomorrow, Wednesday, that ADP report that reflects private sector employment is going to be highly scrutinized. Traders are going to be leaning on that to see what Friday's unemployment report might look like. Thursday's initial jobless claims number will be really important as well. And then tomorrow we also have ISM manufacturing, and we've got the official PMIs coming out of China and Europe. So a lot of economic data. Right now, we want strong economic data, period. Period, period, period. Do not worry about TLT. Do not worry about higher interest rates, which, by the way, you can see that TLT sold off early today. Look what it's done since then. There were some nervous jitters on the open today that, here go interest rates again. This is the US 10-year Treasury. And you can see how this is a rally off of the low. And now we've got this steady pullback. Could this be a bearish flag? There would be your upward sloping trend line that gets violated on the downside. And there's your flagpole. Very, very steep, steady selling. What we would like to see right now is we would like to see the type of support that we're getting today. And we would like to see a higher low double bottom right here with the TLT starting to move higher in the midst of strong economic releases this week. If we get that combination, that's going to be really, really good for the market. And I think we might be seeing signs of it. So make sure that you watch that. Let's see how the week unfolds. We'd like to see TLT close near its high of the day. Ultimately, we'd like to see it come back above this 138 level. Then I think that we've got a nice, at least, support level that will hold for a month, perhaps more. Could be even a longer term low. We don't know just yet. So I like what I see in the market right now. I just think that we are in this 3 steps forward, 2 steps backwards process where the bid is constantly challenged. But I think that the news, I think that the catalysts for the market are right around the corner, and they come in the form of economic releases. After the Easter holiday, we come back and earnings season will be right on our doorstep. We'll have another quarter of profits under our belt, and that will help to normalize lofty valuations. So I am fairly bullish in here, and I like what I see. So as far as stocks that we'd be looking for, yesterday I'd mentioned ATVI. Let's take a look at that. I always like to review the previous day's pick. Choppy, 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 choppy stock. Okay, so it moves around. That's why I was mentioning I like this horizontal support level right here. I like selling it out of the money bullish put spread below the 100-day moving average. If you're following that advice and you were trying to get that trade off, you had an opportunity to do so this morning on the open as the stock pulled back. So I'm not looking for ATVI to be zoom off to the races. Selling it out of the money bullish put spread because it has really decent technical support right here. I want time to tick away. I feel that this support is going to hold for a long period of time, and time decay will continue to eat away at that bullish put spread while the market is still trying to find its stride as well. That's why I like the trade. So let's see what else we've got that might set up well. I'm going to go into the heavy buying list, and Baidu looks really, really good. We had a lot of selling because of the hedge fund that went under. They were long a lot of Chinese stocks, so they had to liquidate those portfolios. And you can see the massive drop that we had in Baidu. It's got to get above this 100-day moving average. Once it does so, I think it could be off to the races. So I really like this one. Pete, how do I set myself up for this? Well, you click on that bar and you click on that bar and you set a nice downward sloping trend line. Now, in order for this to be triggered, if the stock stays below that 100-day moving average, this is going to come down pretty quickly because it's so steep, and then eventually it'll be coinciding with that 100-day moving average breakout. I can also set another alert click GTC, click on the top of this candle. Now I also have a horizontal alert right there, but I think you want to keep an eye on Baidu, Roku. Nothing good there, at least not yet. Mara is excellent. This is a tech stock, and you can see how it is trying to get through this downward sloping trend line. So you click on the high right there, you click on the high right there. There's your downward sloping trend line. I like it. I think this stock is going to go. Given that it's in the tech sector and the QQQ has been super weak, I think there's a good opportunity there. DISCA, I had mentioned yesterday about selling those $22.50 puts for $1.50. Boy, was that a nice trade. There still might be a nice trade in here, but a lot of the option implied volatility has gotten sucked out of this one. So I think that opportunity came Friday, and for right now, let's see if it can hold this support. There still might be some stock to sell, so it could go lower, but I don't think that it's going to plunge. I think that most of the uh, selling is over on that particular issue. So it could move lower. I'm just not looking for it to plunge. And the option implied volatilities have come in, indicating that my sentiment is probably on the right side of that. That seems to be the consensus thinking on it. Got another one here, K-Web. Right on that 200-day moving average, long tail under body. Yeah, looks nice for day trading. I think that would be a good candidate, but I'd rather focus on stocks that are moving higher, not that are really struggling to hold the bid right now. I'm going to continue to take a look here and see what we've got. LOW, really nice breakout here through horizontal resistance. You can see the relative strength there. This looks good. I would be selling an out of the money bullish put spread keying off of that horizontal resistance is now support, and that comes into play right around the 177.50 level. Continue to go down. It's also a choppy stock though. Continue to take a look. I'm still looking for the trade that I might want to highlight today that I think is going to be the one. We'll go into Pop Bull, Pop Plus Bull, take a look there. We've got a lot of stocks right now that are in the hospitality sector, and I would include airlines are in transportation, but they're also tied to the hospitality, travel, and entertainment sector. So we've had Hilton up, we've had Airbnb has been up, and we've had Wynn Hotels up. So I'm just trying to take a look and see where the strength might be today. Caterpillar has been good, but I keep highlighting that. Target's been on the list. FedEx. Now that's a really nice looking stock. I like FedEx. That's going to be the trade that I highlight. You can see this upward sloping trend line right here. Let's draw it for you. I'm going to click on this low right here. I'm going to click on that low. Actually, we'll extend it to that. And you can see 1, 2, 3 touches, which validates this upward sloping trend line. The more touches, the better for a trend line. And it coincides with that 100-day moving average. You can see how it had earnings right back here just a week ago. So we've got earnings season out of the way. If I wanted to play it pretty safe on this one, the stock is currently at 185. So we're not going to get a lot of premium if we start getting way out of the money on this, but I think we can come down to the 62.50. So selling the 62.50s, buying the $60 puts, that might work. And of course, I'm referring to 262.50. So let's take a look and see what we've got for April. Probably not going to get a lot for this. And we'll go down here. And you can see that we've got the 262.50, 260 bullish put spread right there, selling the 262.50s, buying the 260s. Right now it looks like it is 7 cents bid, offered at 28 cents. I need to get 50 cents for that. I'm not going to do that spread unless I can get 50 cents for it. And you can see how it is 2 standard deviations out of the money. The black line here is the 100-day moving average. You can see it coinciding there. So it's kind of a nice feature in Option Stalker that helps me identify those support levels. So let's go and see if we can find a different expiration. We can go out to April 23rd, and this is the process. You just keep going farther out in time until you can get the credit that you want. So we'll take a look at the 262.50, and we got to reset this because we've already got those options. 262.50, And you can see that the option bid-ask spreads start to really widen out on some of these stocks when you get into the weekly options. Here you can see 35-cent bid, actually negative 35-cent bid offered at 42 cents. Still not getting there. So not a lot of option implied volatility here. We're going to finally go out to the April 30th expiration. I like to keep my trades inside of a month so that I can take advantage of accelerated time premium decay. So I don't want to go out any further than that. And there I'm going to click on that 262.50 and on that 260 bullish put spread, mile wide. So in this instance, you can see that the spread is a negative 97 cents bid offered at $1.10. Super, super wide. It's going to continue to be that way until those options get closer and closer to expiration. Then those bid ask spreads tend to tighten up. I don't mind doing this spread as long as I know I want 50 cents for this. I can put my offer out there for 50 cents. If I get filled, I get filled. If I don't, I move on. I look for the next trade. So that would be the suggested strategy for this. I do like FedEx. I love this strength right in here. It's been able to get through this little horizontal resistance level. I like the upward sloping trend line. I like the support around the 100-day moving average. I like the earnings reaction. There's your earnings, there's your reaction. It's still got plenty of headroom. Economic growth is starting to pick up. That's going to be good for shipping. So I like FDX, but that's how you would approach a stock where you have less than ideal option liquidity and fairly wide bid-ask spreads. If you're going to day trade, yes, I think FDX makes a great candidate. You've got the market right now waffling around, not really giving you much to work with. I expect this range to hold. We could come down and test this 100-day, or excuse me, the low from the previous day. Here's two possible scenarios, and this is not going to require brain surgery. It's pretty easy to see. Market comes down, starts testing the support level a couple of other times. Well, what happens? You've got people getting anxious to buy here because you've got buy, 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 let's say. Oh, this is such a nice, easy trade for me to do because I can buy here knowing that support is just below me at the prior day's low. And so what happens is buyers start getting stacked up here, and the computer programs know that because they identify this, and eventually late in the day you get a chunk, a long red candle that takes out that support level and it flushes out buyers. So it triggers sell stops because they buy here and they go, well, look, I've got lots of upside and I have very limited downside. So I'm going to buy here and I'll have my stop there. And those programs know that. So they take out that support level. And then what happens after that, if you get follow through, another couple red bars after that, immediately after that means we're going lower. Oftentimes, though, you get that long red bar and then you get a long green bar. So all they did was to shake those buyers out, trigger those sell stops, and then whoosh, right back into the range. That's one possible scenario. The other possible scenario is that eventually you've got sellers up here too. Sell, sell, sell. So you get a couple more sellers up here, and then eventually through the course of the day, the bid strengthens and you get a breakout to the upside that forces these sellers to cover, and that fuels a rally so that you close the gap. I believe that this scenario is most likely. Why? Because TLT has been able to recover from its lows. Higher interest rates have been weighing on the market. We don't have that issue. We also have a nice bullish formation here. We're through that downward sloping trend line and we're above the 50-day moving average on the S&P 500. So of the scenarios that could play out, I would place a higher likelihood on a breakout to the upside. So you take your alert line and you drop it right here. And then you take your alert line and you drop it right here. And so this was also a question that I got, so I may as well address it right now. Let's see if the S&P 500 is in a compression. I love to trade compressions, by the way. Well, why is that? And there you can see that we are in a compression. A yellow dot means a compression on the 1-0 squeeze indicator. Red would mean a bearish breakdown below a compression. There was your compression, and there was your breakdown. And green would mean a breakout. There's your compression right in here. Green would be a breakout to the upside. The beauty of this is I can search for a stock that's in a compression. I can search for a stock that has just recently broken through to the upside of a compression, and I can do that using a custom search engine. So I'm going to go through this exercise. Hopefully some of you are not yawning by now. I want to show you how compressions work. They're very, very effective because when you have a very, very tight trading range for a long period of time, and let's go into a compression. Let's look on a daily basis to see if we can get some swing candidates in a compression. I'll show you exactly what I would do with them. Look, lots and lots of candidates in a compression right now. So let's see if we can find some other characteristics that we might like heavy volume today. Hey, a stock that's in a compression on a daily basis and has heavy volume today, might that be a prelude for a breakout? Probably. So let's take a look at the stocks. Sorry about that. I need to go into the daily chart because that's what we're looking for is compressions on a daily chart. And this was one, and you can see the stock is so volatile that even though these are pretty wide ranges, it's still in a compression. Let's get that 10 squeeze indicator up there, and you can see yellow dots still in a compression. And I'm going to just go through. That's a super tight compression. That's news, typically a takeover when it flatlines like that. I'm just looking for a good setup that I can draw some horizontal support and resistance lines on to show you how I would trade it. Mara in a compression, if you can believe that. And that, a lot of these really, really high flying stocks, when they just start to settle down a little bit, that's where the compression comes into play. So even on a stock like this, well, which I like this, don't know anything about the company. Here's how I would trade it. Look, you actually have a cup and handle formation in here as well. Boy, I like that. That means that when it breaks out of this upward horizontal resistance line, that this stock is probably going to really go. And there's your compression. So how would I trade that? I would wait for that compression breakout. I click GTC and I click the top of that bar right there because when it breaks out, I'm going to get an alert and I wait for the compression to be broken. Then I enter the trade. So I don't like buying straddles. I don't like buying strangles when stocks are in a compression so that either way that the stock goes, I'm going to benefit. The reason I don't like doing that is because I don't have a market tailwind right now. So it's so important to keep everything in context. What's the market doing? The market conditions dictate the option strategies that I'm going to be using. Well, I don't have any tailwind by the market here, so that means that any move that the underlying stock makes, it has to do it all on its own. I have no help from the market whatsoever. Now, if I had a market breakout and a really strong upward move, then I might be willing to buy a straddle or a strangle on this or do a type of strategy that has an upward bias to it. But right now, if the market is flat, what happens when I buy a straddle or a strangle is that I'm exposed to time premium decay. The market could stay flat for a very long period of time. If that happens, the stock is likely to stay flat for a very long period of time. And I don't really know which way this stock is going to go. I suspect that it's going to be to the upside, but I can also drop a GTC alert line right there because that would also be tradable. It's out of the compression, and now I know that it's decided that the downside is the move for it. But this is a pretty nice looking chart. So if you have it up, click on that high right there, draw your horizontal alert line, and you'll be alerted when it finally breaks out of the compression. So we can search for these using the Option Stalker search engine on a daily basis or any other time frame. And if we're day trading, I'm oftentimes looking for a stock that's in a compression, and we can use that same exercise. Heavy volume today, compression in. Let's go with heavy volume on a 30-minute basis and stock greater than prior day's high. So in this instance, great option liquidity, stock is making a decent move, market is lower than it was the prior day, so this stock has heavy volume and relative strength, and it happens to be in a compression on a 5-minute basis. So if I go through this list and I start looking at all these stocks right here, and I'm going to put it all the way over to the side, and now I'm going to go into the 5-minute. Let's take a look at some of these and how we would use that information to our advantage. So Baidu we already took a look at. That has really, really nice strength on a daily basis. Unfortunately, my recording software is starting to interfere with my trading platform, so we're stuck a little bit here, but we'll be out of it. And there you can see everything catching up. So here you've got the stock compressing. You can see the yellow dots near the high of the day. Alert line, I'm only going to use alert because this is day trading. I'm going to click on that high. There's my alert line. And I'll go back and I'll do exactly the same thing for the other stocks that are on this list. So let's take a quick look at Baidu. There's a nice compression. Now here, you've had a nice move in the stock. If you're just looking to trade this compression, you double click on this, and actually we're through that already, and you would have dropped an alert line right here. Personally, I would favor Baidu on the upside, so I may only want to drop those alert lines on the upside because I have a bullish bias on the stock. CAN, I'm just going to take a look at one that's got really nice tight compression that we can lean on. This one's actually nice. There you go, DISCA. There's your compression. We know that this stock has been super hot. I'm going to conclude with this one by taking an alert line and dropping it right there. And I'm going to take an alert line and I'm going to drop it right there. And now when the stock breaks out of this compression, I'm going to know if I want to be a little bit more aggressive on one side or the other. There's a compression right in here inside of this one. I can pick the highest candle and double click on that, and there's a really tight alert line. But when you break out of these compressions, you would like to see some really nice volume starting to come in. In fact, if you've got that volume ramping up while it's still in the compression, those are the ones you really want to search for because that compression is not going to last long. One side or the other is going to prevail. The tighter the compression, the longer the compression, usually the bigger the breakout and more sustained the move. Thanks so much for watching. Please make sure to post your questions. I'll answer them in the comments section if I'm able to. If I'm not able to, I'll do an entire video on it. Watch for those S&P trading videos. Thank you so much. Thank you for watching this YouTube video. I'm Pete Stolzers, and I'm going to keep the trade ideas coming along with lots of education, so make sure to subscribe to the channel and please turn on your notifications so that you never miss another trade. If you like the content, please give it a thumbs up. I've loaded 2 other videos that I think you're really going to enjoy. Stay tuned. We'll see you soon.